Dollar set for first monthly gain of 2025 as trade deals ease uncertainty. The U.S. dollar is poised to achieve its first monthly increase of 2025, buoyed by a decrease in trade uncertainties and the underlying strength of the American economy. This shift comes at a time when global markets are closely monitoring changes in financial landscapes. As of Thursday, July 31st, the dollar saw a significant rise against the Japanese yen, reaching levels not seen since late May. With July nearing its close, the dollar is on track to appreciate approximately 5% for the month, marking its most substantial monthly gain since December of the previous year, with its latest valuation standing at 150.765 yen, reflecting a 0.83% increase. Interestingly, the Bank of Japan, BOJ, made headlines by maintaining its short-term interest rates at 0.5%, a decision supported unanimously by its members. However, they did raise their inflation forecasts for the coming years, indicating optimism about the economy's recovery. This development came right after the Federal Reserve held U.S. interest rates steady, despite ongoing pressure from President Donald Trump to make cuts. Fed Chair Jerome Powell reiterated that there was no urgent need to lower rates, underscoring the Fed's measured approach to monetary policy. The dollar's ascendant trajectory can largely be attributed to a hawkish stance from the Federal Reserve, coupled with signs of resilience in the U.S. economy. After a period of volatile and often chaotic trade policy under Trump's administration, clarity has been restored thanks to recent trade agreements which have reduced some uncertainties. The dollar index, which tracks the currency against a basket of other currencies, reported a gain of 0.16%, landing at 99.949 after a notable increase of nearly 1% in the previous trading day. This indicates that the dollar is indeed set for its first monthly rise in 2025. Juan Perez, a trading director at Monex USA, pointed out the ongoing tension between the Federal Reserve's approach and expectations from the White House, which may influence investor sentiment. His remarks highlight that while the hawkish policies have contributed to the dollar's strength, the interplay of political pressures creates a complex environment for currency traders. Recent job market data showed only a slight increase in applications for unemployment benefits last week, a sign that the stability in the labor market continues to hold firm amidst economic challenges. Conversely, the euro has suffered significantly from the dollar's strength this month. Investors seem to be recalibrating their strategies, moving away from earlier bullish positions on the euro, particularly after news surfaced about European concessions in trade negotiations with the U.S. The euro saw a modest increase of 0.19%, trading at $1.1426. It remains on course to lose nearly 3% this month, indicating a shift in investor confidence. Rabobank strategist Jane Foley commented on the overly optimistic positioning of the euro, suggesting that this overconfidence has been corrected by recent market developments. The dollar also faced minor setbacks against the Swiss franc, decreasing by 0.31%, but was nonetheless set to achieve a 2.36% gain for the month. The recent trade agreement from the European Union imposing 15% tariffs on certain U.S. exports has contributed to a clearer trade environment. BOJ Governor Kazuo Ueda remarked that the recent U.S.-Japan trade deal has eased forecast uncertainties and raised the chances of Japan finally achieving the BOJ's target of 2% inflation, a necessary condition for potential interest rate hikes. Furthermore, as the U.S. engages in new trade agreements, including one that will impose a 15% tariff on South Korean imports, much lower than the originally threatened 25%, the South Korean currency has strengthened, highlighting the dynamic shifts in the foreign exchange market. President Trump also announced significant new tariffs on Brazilian imports, while indicating that negotiations with India are still ongoing. Meanwhile, he granted Mexico a 90-day extension ahead of another deadline, reflecting the ongoing complexities in international trade relations. While the immediate effects of these tariffs might cause fluctuations in the dollar's value, analysts from Goldman Sachs warn that the long-term implications could ultimately have a negative impact on the dollar, despite some initial boost provided by bilateral agreements, particularly with the EU. This evolving scenario opens up several questions. How will these trade agreements impact the dollar's strength in the coming months? Are we witnessing a sustainable change in the dollar's position, or could political pressures create more volatility? Share your thoughts in the comments. Is the dollar's rise justified, or do you foresee challenges ahead? U.S. dollar surges 2.7% in July. Trump trade deals boost economy 2025. The U.S. dollar just pulled off a stunning comeback, marking its most impressive monthly performance since Donald Trump first took the presidential oath in January. In July 2025, the Bloomberg Dollar Spot Index surged 2.7%, defying earlier predictions of a slowdown and sparking debates about the true drivers behind this rally. But here's where it gets controversial. Was this surge driven by sound economic policy or a temporary boost from shifting trade dynamics? Let's break it down. The U.S. economy, often seen as the global economic engine, reported a 3% annualized growth rate in the second quarter, a robust figure even by optimistic standards. This came on the heels of Trump's recent trade agreements, which some analysts argue have reshaped global supply chains and boosted investor confidence. However, the Federal Reserve has repeatedly cautioned that growth is moderating, creating a tension between official forecasts and real-world data. And this is the part most people miss. The dollar's strength isn't just about trade deals. It's also about market psychology. Investors are betting on a resilient U.S. economy, even as conflicting signals emerge from policymakers. But does this optimism hold water? Critics argue that the 3% GDP number might be inflated by short-term factors like inventory restocking or one-off policy changes, rather than sustainable structural growth. So, what's next? Will the dollar's momentum continue, or is this a fleeting victory? We'd love to hear your take. Do you think Trump's trade strategies are the real game changer, or is the dollar's rise just a statistical mirage? Share your thoughts in the comments below. Dollar strengthens on robust U.S. economic data. Fed holds rates. New India tariffs announced. In a surprising turn of events, the U.S. dollar has surged ahead against its major rivals after robust GDP figures were released, and the Federal Reserve decided to keep interest rates steady. If you've been following currency markets, you know this kind of movement can make waves across global economies. But here's where it gets controversial. While President Donald Trump continues to push for rate cuts, it's controversial. The Fed remains resolute in its decision to hold firm, leaving many wondering who will blink first. On Friday, the dollar stabilized near two-week lows, but was still on track for its steepest weekly decline in a month. This roller coaster ride has left traders questioning whether the recent strength is sustainable or just a fleeting reaction to economic data. To add some context, the Federal Reserve kept the federal funds rate within the range of 4.25% to 4.5%, defying calls from Trump for lower rates. At a press conference on Wednesday, Fed Chair Jerome Powell emphasized that no decisions have been made regarding September's meeting and noted that the central bank must assess the impact of ongoing trade tensions before taking any action. The U.S. economy delivered stronger than expected results in Q2, growing by an impressive 3%. Economists surveyed by Reuters had anticipated only a 2.4% expansion, so this news acted as rocket fuel for the greenback. Such growth highlights the resilience of the American economy despite lingering uncertainties about tariffs and global trade dynamics. Meanwhile, the euro took another hit, extending its losses against the dollar. It fell 0.5% to 1.1493, marking its fifth consecutive session of declines and hitting levels unseen since June 23rd. What's more, the euro is now set to experience its first monthly drop of 2025. Partly due to market reactions over a newly announced U.S.-European Union trade agreement earlier in the week. Could this signal trouble ahead for Europe? Or are we simply witnessing short-term volatility? The dollar index climbed further, rising 0.4% to reach 99.29, positioning itself for its inaugural monthly gain this year. This uptick reflects renewed confidence among investors, thanks to fresh trade deals struck with Japan last week and the EU over the weekend. These agreements underscore America's commitment to re-engaging globally, which seems to be calming investor nerves for now. But let's talk about what everyone's watching closely: negotiations between China and the U.S. After agreeing to extend their 90-day tariff truce, officials from both nations are back at the table. However, President Trump added drama to the mix by announcing a 25% tariff on Indian imports starting August 1st. Trump can afford to take a hard line on India because he's already secured several other deals. Explained Steve Englander, head of global G10 FX research at Standard Chartered in New York. He added, "While I doubt the tariffs will end up being as severe as hinted, Trump clearly wants leverage to negotiate terms favorable to the U.S. This raises an intriguing question. Is Trump's aggressive stance on trade a calculated strategy aimed at securing better deals? Or could it backfire and destabilize fragile alliances? We'd love to hear your thoughts in the comments below. Shifting focus to Europe, Germany reported a contraction in its economy during the second quarter, while France managed to outperform expectations. Meanwhile, all eyes are on Bank of Japan Governor Kazuo Ueda, whose comments may hint at potential rate adjustments following the recent U.S.-Japan trade deal. Investors hope this agreement will pave the way for higher rates when the BOJ meets on Thursday. Finally, the dollar gained slightly against the Japanese yen, climbing 0.1% to 148.64 and reaching a two-week high. Against the Swiss franc, the dollar strengthened even further, appreciating 0.65% to 0.811 francs, the highest level seen since June 24th. With so much happening in currency markets, one thing is clear: volatility isn't going away anytime soon. So, how do you think these developments will shape the future of global trade and monetary policy? Share your insights. We're eager to hear from you.